Hi, Jim Roddy here from the RSPA. Wanted to chat with you for a minute before we start today's pod. First, it's been about 3 weeks since our last episode, and that's because we've been busy compiling the 2025 RSPA Retail IT Channel KPI study, which is going to be the focus of today's episode. Now, something else that's kept Team RSPA busy is making the necessary preparation so I can announce to you today that registration is now open for Retail Now 2025, the Retail Technology Channel's #1 trade show, education conference, and networking event. Join RSPA and Retail IT Channel leaders live and in person July 27th through the 29th in Las Vegas on the Strip at Caesars Palace. With nearly 200 exhibiting organizations, Retail Now is one-stop shopping for VARs and ISVs. And with an expected 1,600 or more attendees, it's the place for extreme industry connectivity. Across just 48 hours, you'll meet new partners and new solution providers who can help accelerate the success of your business. If you're serious about the Retail IT Channel, you have to attend Retail Now 2025. Again, July 27th through the 29th in Vegas. Retail Now is where the industry meets. For all the details and to register at discounted early bird rates, visit the Retail Now website today at gorspa.org/retail now. Again, gorspa.org/retail now. We hope to see you there, and I hope you enjoy this episode. Welcome to another episode of the Trusted Advisor podcast and video series powered by the Retail Solutions Providers Association. Our goal on the pod is to accelerate the success of today's and tomorrow's leaders in the retail IT industry. I'm Jim Roddy, back with you again. Thank you so much for joining us. Now, we have a very special episode for you today. So the RSPA recently published its 2025 Retail IT Channel KPI study. This is the 9th year of the report, and we've invited back 2 veteran channel executives to help us dig deep into the numbers and tell you what it all means for VARs, ISVs, vendors, and distributors. So before we meet our guests, if you want your own copy of the 2025 RSPA Retail IT Channel KPI study, you can go to gorspa.org, find resources, and then select industry reports from the drop-down menu. Or if you want to shortcut that, just Google RSPA industry reports, and that should be your first result. If it's not, the Racket Sports Professionals Association, that's an RSPA as well. They must be getting into new industry reports as well. They used to be the United States Professional Tennis Association, but because of pickleball, we'll talk marketing, right, I'm sure at some point, they needed to brand and expand a little bit. So they are, if you go to rspa.net, that's not us, that's the Racket Association. So who knew? Well, we found out the hard way because the people have reached out to renew their membership, and we're like, we have no idea what you're talking about with your Racket membership. So, all right. Well, before we get into talking more RSPA and channel stuff, let's meet our guest. Our first guest analyst today is Dean Reverman, the Vice President of Marketing for value-added distributor BlueStar. Dean joined BlueStar in 2011 after 12 years working for a Kentucky-based VAR. Dean's a member of the RSPA marketing community, and he's co-host of the award-winning BlueStar Nation podcast, which is closing in on 250 episodes. This is Dean's 3rd year helping us analyze the KPI study. Dean, welcome back. Always a pleasure to connect with you.
Thank you, Jim. It's a pleasure to be here and look forward to diving into this study as always. Good stuff in here.
Excellent. Great. This will be fun. Our second guest is Will Atkinson, the Vice President of Customer Experience at ISV VAR Hybrid POS Nation. Will was president of CAP Software from 2006 to 2020 until CAP was acquired by POS Nation. Will's been active in the association for years on the membership advisory group and as an RSPA board member. This is also Will's 3rd year analyzing the KPI study. Hey, Will, welcome back to the Trusted Advisor.
Glad to be here, Jim.
Great. So, folks, we asked Dean and Will to help us analyze the study because of their broader perspective of the channel, right? We talked about Will is part of a hybrid ISV VAR who works with many reseller partners, and BlueStar works with hundreds of VARs and ISVs throughout North America. So Dean has that front row seat to a lot of the changes in the solution provider community. So I want to keep the first part of our conversation like as open-ended as we can get. You guys can surprise me with any insight and observations that we have. The KPI study, it's like over 8,000 words long, and then it's got thousands of digits. And so from all that data, Dean, I want you to go first because Will went first last year. What was the first thing that jumped out to you from the KPI study?
Optimism. Optimism is back, I guess, right? So 2024 was kind of it was a unique year for a lot of folks. When we came into it, we thought that it had the potential of being kind of a really bad year in general, and certainly the first part of the year started out that way. All the tea leaves were being read correctly, and so that was kind of not so good, right? But then towards the second half of the year, and obviously it kind of pulled out a little bit better than we had anticipated. And so last year, a lot of people talked about flat is good. If you were just flat or a little bit down, that was actually seen as a positive thing. We had a lot of vendors that took it on the chin last year, from a sales perspective. So what I love to see is just right out of the gate that the optimism is kind of pulling through in this particular survey. So people are feeling relatively optimistic about where their revenue growth is going to go. When you dive into some of those numbers, and I'm just kind of focusing in on the VAR revenue growth, I love this. By the way, I love this survey, Jim, because you have so much history here. We can go back all the way to 2016 to see and to kind of analyze what the feelings were and what the expectations were of the group. So when you looked at it, for VARs that were thinking that they were going to have revenue growth under 5%, well, back in 2016, and admittedly, that was a bad year, right? We got to go back and look at that year because that was a bad year. 65% of VARs, actual revenue was under 5% growth. Now, today, the expectation is that's going to be 38%. So there's just this a revenue growth. They're saying that they're not going to have less than 5%, which is really good. But you really saw a lot of growth in that 5 to 19%. Back in 2016, only 25% thought they were going to see growth in the 5 to 19%. Now it's 44. So you're seeing revenue growth in actual numbers, but you're also seeing the optimism come back, where you're seeing it both from VARs and ISVs and the hybrids that answered the survey. There seems to be a little bit of optimism going into 2025. So I'll pause there for a second. But for me, that was one of the key highlights that came out.
Got it. Thank you, Dean. Will, can you talk about what Dean is focusing on there, the optimism? What is your take on that? What's your reaction to what Dean said, and then some of the numbers he shared from the report related to why VARs and ISVs had stronger than expected 2024s, and they're even more optimistic about next year?
Yeah, for sure. So, I think last year was a funny time. We've been in a funny time for 5 years now, and probably we would have said the same thing in 2019 if you'd asked anybody with all the change. And there's a lot of things going on outside of the purview of this group that we don't want to, dive into politics or whatever. But obviously, COVID was a big disruption. And I think we, in 2023, had this sense of new normal. We're back to doing business the way we were. And there was a lot of optimism. And there were several things that went on in the channel and really the second half of 2023 that drove a lot of growth, drove a lot of thinking, okay, this is the baseline. We're back. And then the first quarter of 2024 really brought us crashing back to earth in a lot of ways. Some of the things that had happened in that second half were blips, not new normal trends. And so a lot of people had to reset expectations. But then we got there in the second half of 2024. And you can see that in all these projections. People said, going into 2024, it was going to be a great year. And then it, for people that weren't able to adapt or were focused on the wrong markets, didn't turn out that way. But I know we saw, specifically in some verticals, that behavior where people had just kind of hunkered down and held on. Uncertainty is a really bad thing for any market. You look at the stock market or anything else, but if you're planning a business investment, you're saying, hey, I'm going to go spend the type of money I spend every 5 years, and you're looking at the news and it's all interest rates, inflation, Fed, bad news, like money is a problem for everybody. Well, I'm just not going to do anything. I'm going to sit on that. But if you've been optimistic for a quarter and then put your money on the sidelines and you think my business has opportunity, I'm going to go add a new store. And I'm speaking as the retailer, restaurateur. I've got actually good things happening in my business, but everything I see in the news is negative, probably going to be a problem for me. So I can sit back and wait a little bit. But if I get 6 months down the road, I'm still thinking, hey, my numbers are good in my existing store or restaurant, whatever it is. I don't want to just sit here losing opportunity. I need to go ahead and do something. And I think that's what happened. People just freed up that investment in the second half of the year. And so a lot of verticals ended up doing really well.
Yes, when the year came to an end, a couple of things just to clarify. One, like this is the ninth year of the report. That this is almost like study 9.5, because in 2020 we released the report like we usually do in late February, March, and then the world fell apart COVID-wise. So it kind of made the report, a lot of the projections, irrelevant. We went back and did those projections again. And your point, Will, is spot on about the uncertainty. That's one thing that we found out. I'm going to do this, or I'm going to do this instead, but there's always that option of doing nothing, right?
Mm-hmm.
Of not going to a show, not finding a new partner. And like you said, you're going to hunker down, kind of batten down the hatches and doing it that way. So that's what it seems like. There were still some folks who did that, but a lot of that ended up shaking out before the end of the year. So yes, stronger than, so for folks, again, who haven't read this study yet, 2024 came in stronger than expected, than what a lot of folks thought it was going to be. And 2025, they're even more optimistic about it. So, all right. So optimism is the first point. Will, it is now your turn. What is the number one thing from this year's KPI study that caught your attention?
So I think, and this is a thing that we've been talking about for a long time. And I think maybe 15 years ago, we said the VAR is dead, right? And it hasn't come true, and it probably won't ever come true. But I still think it's dangerous to be a pure VAR where you're just reselling products and not adding any real knowledge, based services or integrations or something. And so you see that trend accelerating through the last several years. And especially a lot of people seem to be optimistic going into 2025 about how we're going to add integration layers or software value. And so becoming that hybrid. And I'm not suggesting everybody go full bore and become an ISV. That's hard. It's expensive. It's risky. And you may not, you may bet all your eggs on that and then fail. And that's why, you see some of these negative numbers where people saw revenue shrinkage or risk, because you kind of jump all in and say, we're going to spend all of our investment dollars on hiring a bunch of software developers and just figure it out as we go. And that's a dangerous strategy. But, I think VARs are uniquely positioned to go talk to their customers. And if you've got 200 or 500 existing customers in a wide range of restaurants or a wide range of retailers, go talk to them and say, hey, we've been selling you this software product and this payment processing and this hardware. What problems are we not solving for you? What problems have you been out Googling? How do I solve my curbside pickup or my online inventory or my whatever it is, my text messaging to customers? And I think a VAR can go take baby steps and either find a partner or just outsource like limited development dollars and say, help us bolt these things together, help us provide this different thing and become that, intro hybrid. You don't have to go full bore and become a full ISV and also sell direct. You can continue selling other people's products, but add that layer. And I think that's what value add is really becoming the mean, is adding that hybridization of your products and platforms.
Got it. And so just to clarify, so thank you for that, Will. Just when you say it's dangerous to be a pure VAR, you're talking about here's my product and solution set, and here's what I'm going to do, and almost like it or leave it is essentially what it is. And so you're saying go in there and be more advisory, but then it's not just, hey, let me twist what I'm currently selling to you, right? Shape it from the way that I phrase it to you. Go out and find some new partners who can actually solve the problems. Or part of that partnership could be somebody who could help you develop on top of your current set of software products. Is that what you're saying? I just want to clarify that.
Yeah, exactly. Like if you're just buying product and delivering it to the customer, somebody's going to come eat your lunch, potentially. And so, but if you're saying, hey, I'm going to go find partners that help bolt these things together, or hire like a part-time web developer that can do some unique stuff for the customer. It doesn't have to be $500,000 a year in software development. You could spend $30,000 and get some just project-based add on these things, but then you sell it to the customer into that recurring revenue, which I'm sure we're going to talk about more today. Is, it's another value add. It's another thing that makes you stickier with that customer, and you're not just selling some other products into that site.
Great. Dean, what's your take on what Will said? Dangerous to be a pure VAR.
Dead on, and I'll add into this the part of the narrative here, and the numbers kind of come out when you look at the as a service, which is in this survey here. We've been asking in this survey what percentage of your business has been transitioned into as a service, and when you look at it, back in 2016. Those folks that said 0% were transitioned was 12%. So 9 years ago, 12% of folks hadn't transitioned any portion of their business into an as of service. Today, that is now down to just 1.2%. So let's call it 1%, right? So the message about as a service and adding on services and everything that Will just said so eloquently about, how you need to transition a portion of your business is panning out in the survey. When you look at those that say barely transitioned, well, back 9 years ago, it was 21%. Now it's only 9%. So when you add those up, again, 9 years ago, about 30% of people hadn't even done or barely done anything in the as a service world. Now that's all the way down to 10%. So, if for those 10%, I think Will's accurate. If you're still in that, you really need to think of a way to get out of that. And I will, again, just bring to the table the ultimate list of recurring revenue products and services now at version 4.0. That you can find on the RSPA site. What a brilliant list. I mean, if you're looking for a way, because there's a lot of ways, right? That resellers, I remember when I worked for a reseller, you're always gauging, what do my customers need? What can I do with the skill sets that I have in place? We had web developers on staff. And so we knew that, okay, that's a certain discipline, but maybe we can start getting into some of the programming aspects as well. So a lot of it depends on who your employees are, what those skill sets are, and where you can kind of move. But if you look at that ultimate list of recurring revenue, there's all kinds of opportunities there. And I'll call out a couple of them, that are related. You get into cellular failover, which starts getting into the data that folks need to run their business. There is an opportunity there for making revenue, getting revenue as a part of that. That you should start looking into. Electronic shelf labels, for whatever reason, that's starting to get a real run, I think, in the marketplace, because that can be an as a service or some programming that goes into that. So there are a couple of areas out there, products and services that you can add, but it's clear that I think the industry has gotten the message that they need to move in that, which is good. I think that a lot of folks have moved in there, and I'll weave it back to the optimism. When you think about it, if you feel more optimistic if you have more cards that you can play than just selling POS. If you go into it with the mindset of how can I help my customer, as Will was just saying, it's a much better position to be, much more optimistic about what you can do for your customers and compete against those, the 800 numbers, those of the world that the VC back that are just, narrowing in on specific things. You can compete more broadly with that. So it's a good call out, Will. Really good call out.
Excellent. And thanks for sharing some of that data. It's interesting, Dean. I always look at the other side of that chart in terms of who's doing more recurring revenue, and you're paying attention to see how dwindling that other side is. And so our reader,
right.
So our listeners are on the same page in terms of recurring revenue. So I'm reading from the report. It is like quoting myself. Reading from the report. As longtime proponents of the as-a-service business model, we're thrilled retail IT solution providers continue to embrace recurring revenue. And so this is where, Dean, I'm looking at the other side of the chart. The number of solution providers in the top two categories completely transition. That means 85 to 100% of the revenue is recurring, and mostly transition. That means 61 to 84%. Achieved a record high 59.3% share in 2025, surpassing last year's record 56.3%. And respondents expect that figure to increase to 69.8% in 2025. And year after year, they've been pretty consistent in terms of that they have been moving up in order to do that. So yeah, Yeah, so the numbers really
they do, and
bear
it's
that out.
interesting that you picked up on that. That I was looking at the other tier because to me, I don't know that we're kind of right around that 40%. Is that where we're at? We're 100% completely transitioned. I mean, last year we were at 30%. When they're looking at the projections, about 42% of folks think that they're going to be 100% completely transitioned. For me, the reality is maybe it hovers right around that 50% that's 100% completely transitioned. I was just looking for the ball moving on the low end, right? Trying to get those stragglers that are like, I don't need it as a service type of a thing. I really think that, in order to be relevant in today's world, you have to have these types of services. You have to look to get sticky with your customer. And the best way to do that is through as a service. And there's a myriad of ways to do it.
And
Thank you for that. And yeah, go ahead, Will.
Just from it sounds risky. I think that's been the objection when you talk to smaller VARs or traditional VARs. Just said, how do I do that? I can't go hire a bunch of net new people. We don't know that. And I would challenge you, go talk to your technicians and ask if they really just want to be techs for the rest of their lives. Because I know we have steady turnover of techs leaving for development opportunities, website work, cybersecurity. These are upwardly mobile people. And to stick with Dean's optimism, you want to be optimistic about your workforce. And if you just have to say to everybody, status quo, you're going to do the same thing this year that you did last year and next year and onward, they're not going to stay. People want change in their own careers. And so you can try it out. Just say, hey, one of your younger techs or senior techs that's got really knows the market, but also has been interested in, just talk to your guys. Are they taking web design courses at night? Are they looking at development? I bet you have somebody on staff that's doing that and say, okay, let's have a half-day breakout session where we just talk about the things we do, what and maybe we can come up with an idea of something we can try for a handful of customers. You just have to start somewhere. Don't let starting be the obstacle.
Yeah.
Great. Excellent. And then also just for clarification for folks who want to read more about it, Dean mentioned the ultimate list of recurring revenue products and services for point of sale VARs. We now have, like Dean said, version 4.0. It's on the RSPA website, or if you just Google RSPA Ultimate Recurring Revenue, you should be able to find that again. Make sure it's 4.0. Now up to 57 products and services on that list. And it's not a dream list. It is products and services actually being implemented by POS VARs in 2024 when we updated that. So, all right, very good. So let's do this again. So Dean, what's point number 2? What's another item from the survey that you felt was important?
Healthy margins, right? So you would think that on an off year when sales were maybe harder to get than before, that you would see some margin erosion. That was my expectation. Oh, okay, they're going to have to give up some margin to get the deals in, to pull those deals in. And that's not necessarily the case. Now, I think we can dive into it because the survey does a fantastic job of lining out, where VARs are getting their margin from and their profit, if you will. But just in general, if you look at the overall trends, 2024 was a pretty good year with just about 10% saying that they were under 5% in profitability, but 68.5% showing double-digit margins. And that's just a little bit off from perhaps the best year, which was 2022, as the survey relays. So I was comforted by the fact that, again, you pucker up thinking, well, this isn't going to be such a good year. We're going to have to leave some margin on the table to pull some stuff through. Didn't really see that. You saw some healthy margins, and that's a good thing. That also, to me, is an indicator that maybe, again, further expanding on the fact that people are getting into the as a service. They're going out and they're finding more profitable things to do. Now, the argument that the survey makes is, are VARs still too reliant on the payments side of the business and the revenue that they're getting from that? And I think that you can make a good argument that maybe that's the cash cow that is the 800-pound gorilla. Oh, man, I'm using all kinds of cliches here, but
stacking them up,
baby. But you know what I mean? I mean, I think it's worth asking that question, because if you become too reliant on that, that means that you're not pivoting off of your core to find other avenues. And you really need to do that to stay profitable. So I like the fact that we're still seeing high margins.
Great. And so, Will, before I get your take on that, so a couple data points just to add from the report. Like Dean had said, for this year, we had 68.5% of VARs reported double-digit margins. That's a 10% margin or better is what they've been doing year after year. And then we also asked a question to VARs and hybrids, and we compared them. And again, a hybrid is somebody who, like Will, they're both doing software and they're working as a reseller. And so I don't have those numbers exactly in front of me, but it's ballpark. Both VARs and hybrids, about a third of their, we asked them who has more than half of the revenue coming from one source. A third of each of those groups said more than half the revenue is coming from payments. So that is something significant. And your payments vendors, if they start changing the way that they operate, you might have a revenue hit there in the short term. So Will, your reaction to Dean calling out margins in general, and then also our VARs and hybrids maybe is a little too reliant on payments. What's your reaction?
Yeah, I mean, I think the interesting additional question, I would ask individuals is where's your margin coming from? And I bet you it's not from selling hardware and standard products. That's guys diversifying, finding ways to sell pure services, ways to sell software that's not a commoditized, that's where we make margin. If it's just I sell another all-in-one or another printer, like we know what the margins are on those, and it's not 65%, so it's, I think that really points to the positive trend, and the optimism. Like if we can keep as this group doing that, finding ways to sell unique things, then we can protect margin and add to it. I think payments is an important part of that. It's not going away. It is the 800-pound gorilla in the room. And the key is making sure that you have a real partnership agreement. You know what it says, you know what your responsibility is, so you're not breaching it. You know what the payment processor's responsibility is to you. And then making sure that it's a part of your services that's sticky. The issue with pure payments being too big of a mix is if you're just a referral partner, you have no control over the platform, you have no control over the agreements, you're maybe just selling processing sort of as an ISO on the side. We've seen VARs and ISVs do that, where there's a sort of a menu of processors and it's just this thing, hey, like we'll just offer it and hope it works. Like hope is not a great plan, but having a more cohesive, sticky offering where just anytime we sell you software, you're going on our payments and these things are in lockstep, then that's really just operating revenue. It doesn't matter that it's payments. But if the customer can easily switch or the processor can easily do something platform-wide that negatively impacts you, then you're at risk. So I just think being careful about the way you're going to market with it and being careful about the agreements reduces a lot of that risk. But to say, oh, it's too much, that there's some percentage, like if I get to 60% of my revenue is coming from payments, I need to change, is maybe a dangerous thought. So, it's the reality is nobody's growing at double-digit growth without addressing payments.
Agree. Well said. And before I get Will's take on it, I want to add one more data point what we were just talking about. When we compare the pure VARs and then the ISV VAR hybrids, how much they rely on services for more than half of their revenue. Only 7% of VARs said they get more than half of the revenue from services, triple that for the hybrids, right? And that's not even counting software as one of the services, right? It seems like the more sophisticated VARs are not leaning so much on hardware. They're really making sure they stack up those services, which again, we've seen have been for the most part far more profitable than other things that they offer. So, all right. I'm also feeling really good, guys, just so you know, because in a couple weeks, I'm giving a brief presentation at the NCC Partner Conference. And the 3 points that I pulled out from the KPI study are the ones that you guys just mentioned so far. So I'm really feeling really good right now. Either I'm on the right track with you guys, we're all heading down the run track, but I think it's more the former rather than the latter. So Will, what's another important data point or learning from the KPI study you wanted to call out to our audience?
So one that jumped out at me and has continued to be a trend is the nichification, as we look at, and it's further down in the report, but you've got the more narrowly focused verticals like wine and liquor and beverage is 44% of, if we're targeting only one vertical, and you go down to specifics like, cannabis jumped up the list, but ethnic grocery, restaurant, garden, nursery. And the thing that speaks to me is that we're talking about verticals that are not so easily targeted by the national chain operators. And I don't mean the Toasts and the Clovers, but the actual retailers and restaurateurs that we're competing against. If my direct competitor is McDonald's or Walmart, I'm in trouble. But if my direct competitor is another local chain of Indian groceries or another premium burger bar thing or whatever it is, like, there's a lot of room for those businesses, and forever in the channel, restaurants was the place to be over retail. Speaking as a retail ISV for a long time, it's always the non-sexy place to be, because there were so many more new restaurants that were high growth, high volume popping up, and that was just a good place for VARs to be. If you look down that vertical list now, a lot of them are retailers, and it's for that same reason, that we're not competing against the big box stores. You can't, for the most part, go buy beer, wine, liquor at all these big box stores, or you can't buy liquor. Maybe you can buy beer, wine, but you get a limited selection when you go to the grocery store or to Walmart. But I can go to a local liquor store and get that bonded bottle of bourbon or that craft beer or whatever it is. And same for restaurants. There's not in that mid-tier, medium fine dining and certainly fine dining, there's just not national chains competing against our target merchants. So there's actually a book that we've talked about, Jen, that's Nailing Your Niche, but it's, finding out where you have a local market and where your products are a good fit, and then refining that offering and then that service level. And going back to what I'd said in the first point is like, hey, is there something unique we can do for this niche or this small subset of niches? Because if you just say, hey, we do point of sale, everybody does point of sale. But if you do the best service, software, hardware, service platform for premium liquor stores and one or two other verticals, then there's real opportunity for you to protect your margin to Dean's point, and protect your growth and be that trusted provider in the area.
Yeah, I was looking on my bookshelf behind for the folks who are watching on YouTube. I know when you recommended Nailing Your Niche last year, I bought it. I read it. I'm not able to grab it off the bookshelf right now. And I think, was that the one? It doesn't apply specifically like to retail IT, but it really is applicable when you read it and you realize how important it is to nail your niche, as you said.
Yep. Yeah,
Great.
It's not a POS book. It's just hey, be good at one thing, not try to be a generalist. And it's more and more true for this group.
And so, Dean, before I get your take, I do want to share those numbers that Will alluded to. So we say in the report, over the next 12 months, which of these niche verticals do you plan to engage in or seriously investigate? And like Will said, this top three are the same as last year. Wine, beer, liquor, 44%, the runaway leader. Ethnic grocery and restaurant, 32%. Cannabis, 19%. The next three niches all have made regular appearances. Garden and nursery, hardware, and then entertainment / recreation / amusement park / bowling / golf. And then also what popped up is we have never seen these reach double digits for the first time. They all got between 12 and 14%. Healthcare, and then medical offices / hospitals / senior living, and then nonprofit as well. So those are the numbers. Dean, I want to get your take. I might have a follow-up question for both of you guys on these niches, but Dean, what is your take on seeing some of these niche numbers in the KPI study?
My take on here that you did call out in the survey is what I would quantify as MSP creep. There are more and more MSPs coming into our traditional world. It's something that we've been seeing, and we've actually been trying to embrace more and more MSPs because, when we run a churn data analysis every year where we look at our customer base, and the trend is clear that there are just fewer and fewer VARs, traditional VARs in the world, period. So, how do you grow your business if everybody has to grow? Well, one of the markets that we've been looking at are MSPs. And when you think about it, and the reality is MSPs are creeping into a lot of our traditional, what I would say in this realm, a lot of the traditional retail, hospitality type of areas. And when you look at those three call outs that you just did, healthcare, medical offices, and nonprofits, these are traditional, gold mines for an MSP. You know, again, when I think MSP, I'm thinking traditional server, cloud services, type of an entity. They're doing IT support, those types of things. But as more and more IT and OT, which is where we live, operational technologies, blur, there's more crossing of those worlds, more blurring of the lines. And so you're starting to see MSPs get into point of sale. They're offering healthcare, emergency care, those types of things, payment types of solutions. So, you know, I'm calling it MSP creep. You were getting more and more of them creeping into our world. And that's really, again, indicated by this survey here, but really fascinating that those three came way up in the niche. And so that was my call out, is looking at the MSPs.
No, and thank you for calling that out. I'd never heard it called MSP creep before, but I'd say that is spot on and very accurate. And for folks who might be more traditional in the POS world, which is the most, most of the RSPA members, there was a thing where it was, say, 5, 10, 15 years ago, especially when you go back, these MSPs are used to working on laptops and desktops, right? Like that's what they work on. Well, they looked at a POS all-in-one and they're like, I don't understand what in the world that thing is. I don't even want to touch it. So that was one thing. But now that so many of these things are on tablets, right, and they're not as specialty, they're able to, I'm not intimidated by that technology. The other thing is before, because you had to drive in because everything wasn't on the network, I'll never forget going to, do you guys remember Zenith Infotech? They had like a really high up ride and then a big crash down. Google them, you'll find some fascinating stories about them. And so I remember being at one of their conferences and saying, how come you don't get into retail and restaurant especially? And I remember they just said to me, I like to go home at 5 o'clock. I don't have to drive into a bar at 2 a.m. But now because so many things are on the network, right, those things can be handled remotely if it does have to happen after hours. And because of all the managed services tools that they have now, they can keep things up and running and identify them before there is a failure point in there. So it's a different world now. It's not like snap your fingers different, but to your point, Dean, it's been creeping in and the lines are blurred now.
Yep, for sure. And we just have to be cognizant of it, right? Those folks are offering services that are more aligned with us. And also conversely, that's why you see a lot of, I think, traditional resellers, hybrids getting into such things as cybersecurity or the aforementioned data plans, right? Starting to get into the data part, just offering more services. You really, really need to start thinking that way because your competition maybe isn't the traditional folks that you thought. It's your competition are folks that are coming from the IT world and they have a lot, their skill set's a lot different, but applicable to a lot of the things as you just illustrated, for sure.
Will, can you talk before we take a commercial break? Can you talk about MSP creep, I guess, from two areas? You as POS Nation, adding more managed services to what you offer, and then also seeing MSPs from a competition standpoint. Are you running into that at all? If you can talk about those 2 points, if you're willing.
Sure. Yeah. I mean, adding MSP style services, like a simple example would be cloud backup.
Yep.
And even if you're selling cloud software, there's still other things people need to back up. And if they're relying on their thumb drive or local backup or on the network, or we still have customers that call in once in a while with their zip drive and, wondering where they buy more zip disks, and you shake your head and point to the future. But you can bolt on a cloud backup utility very simply and charge $20 a month for that. It's just an easy thing to do. And then that's peace of mind for the merchant. Dean called out cybersecurity. I think helping merchants find security platforms, whether you sell it or just insist that they do it, because that's always a bad day when the merchant calls in to the service provider. Hopefully not you, but it always is. Hey, our computer crashed and we can't access anything and we're down and it's 5 o'clock on Friday and you need to help us with that. Well, if it's malware because they don't have any security things in place, then that's a really bad day. But if it's just a crash and you have a cloud backup, you can drive a new computer out there real quick and download things from the cloud and they're back up and you're the hero. So, simple thing there from a creep standpoint, I would say that, and this hopefully resonates with everybody here, the day the local IT guy gets involved is a bad day for your conversation with the customer. They always want to take it off the rails and say, oh, you've got to do these 6 other things that are really painful and we don't know about that and we can't give them access to this and we've got to lock down the firewall and it makes it harder. So that's the reality, and so if you're offering some of those things, or at least having that conversation with the merchant as part of your here's what we're going to do discussion, then you can offset some of that pain that comes from that encroachment.
Well said, well said. And again, we always talk about on this, and we might talk about partnerships if we have time, but lean on your vendors, lean on your distributors, lean on other VARs, lean on MSPs, right? That you can go together. You do not have to add everything to your expertise. You can act more like the general contractor than you have to be turning the screwdriver on every single one of these products or services. So, all right, we're going to take a quick pause here and let our listeners and viewers know about the Retail Solution Providers Association. The RSPA is North America's largest community of retail technology VARs, software providers, MSPs, vendors, and distributors. Members benefit from RSPA white glove service, which is provided by the member services team of Peggy Fry, Nicole Green, and Katina Bell. Instead of leaving you on your own to navigate our growing list of member companies, we're now close to 750, Peggy, Nicole, and Katina will make warm one-on-one introductions on your behalf to fellow members who can accelerate your success. To learn more, email membership@gorspa.org. Interesting, we were talking about partnerships right before. I'm talking about how the RSP helps with partnerships. This podcast is going almost too well in the first 40 minutes that we have. I'm actually getting nervous for what's going to happen the next 15 or so. That's the pessimist in me. All right, back to our commercial. Also, we want to thank these companies who support the RSP community to make this podcast and video series possible. Our gold sponsors are CoCard, Epson, Heartland, and ScanSource, and our platinum sponsor is BlueStar. Dean, thank you and your team for your support. Finally, want to make sure you know that registration is now open for Retail Now 2025, the Retail IT Channel's #1 trade show, education, conference, and networking event. This year's event is set for July 27th through 29th at Caesars Palace in Las Vegas. For more information, visit gorsp.org/Retail Now. Retail Now is where the industry meets. All right, a few other data points in the KPI study jumped out to me, and I want to get both your opinions on this. So we start the report highlighting revenue per employee, and specifically what it says in the report, the number of solution providers achieving at least $200,000 in revenue per employee was 38.1% in 2024. That's a 5.6% improvement year over year and an 11.8 point improvement across 2 years. It was 26.3% in 2022. 5 of the last 6 years, we've seen that number increase. So that is a trend, right? One might not be a trend, but you get 5 out of 6, it definitely is, right? So those are the undeniable numbers that we have from the report. Now, I want to see if you guys agree with this analysis, and Dean, if you want to go first, and then Will. This is a sign of improving health among the retail IT channels, VARs, and ISVs, despite the ever-increasing presence of margin-obliterating, VC-backed, 800 number, one-size-fits-all POS providers who don't have a channel. Most solution providers have built hardy, growing businesses. Today's VARs and ISVs offering winning combination of high-margin products and services, personalized customer care, and internal efficiency, which leads to solid profits. Dean, do you agree with that analysis? Partially agree, or do you think it's a bunch of hogwash?
I don't think it's a bunch of hogwash. I absolutely agree. I mean, when you look at the trend of revenue per employee, those are strong figures. And it means that the resellers are getting a significant amount, obviously, of revenue per person that they have in there. I still think there's room. There's room for growth there as we become more efficient, as you start adding in things like AI, which again was on the list of recurring revenue items that you could start deploying. There are some things out there. I think Will's point's really valid. Ask what your technicians are getting into. They might start dipping their toe into AI agents, right? That's the phrase that's getting a lot of run right now, but for good reason, because when you think about the integration of LLMs and AI agents, there's a lot that can be done there, and maybe some opportunities to create even more revenue per employee. So I'll double up with this, is that I think also in the survey, and I don't know the exact numbers, Jim, but I think our industry is really, really strong in retention. We are very good at retaining employees for a long time, right? And that's a healthy signal as well. When you have employees that have been in your company for a long time, you can garner more revenue per employee. You can look for ways of expanding your business. So I don't think it's hogwash at all. Seems like it's pretty accurate to what I know of the channel.
Great. And Will, before I get your take on it, I'm going to try to find, I'm scrolling through, it's towards the end of the report
It is.
about the retention. I can't find it right now because this is part of 8,000 words in there. But the vast majority of our members who took the survey, most of them have, below 10% turnover, which is, way better than what you find
So
in
I
the
found
general
it.
world for sure.
It's 76% experience turnover of 5% or less.
Yeah.
That's phenomenal. That's great.
Yes.
So yep, pretty strong.
Yes, so build upon those folks. That's for sure. So, Will, your take on that analysis in terms of, we've got some hardy VARs and ISVs out there.
Yeah, I've joked for a long time that nobody ever leaves point of sale. You can switch companies, but you never get out. So
That's true.
I think Dean's point about AI is one of those things, and we're certainly expanding on it this year. But it's a good example of what I said before: talking to your technicians and your service related people and saying, "What are you interested in?" I guarantee you, they're fiddling with something on their own. I mean, I get that request once a week. Hey, I'm trying this out in ChatGPT or whichever AI. Can we try this? And so we've had to have that overall discussion. Like, hey, it's great that everybody's kind of trying things, but let's at least pick a platform, and everybody do your sort of whiteboard your skunkworks idea, and then let's bring it to the stakeholder that's, we've had to designate like an AI chairperson. But there's other things like that going on. People, like I mentioned, web services is the big one that I think a lot of small retailers, restaurateurs, and VARs aren't very good at. So how do we, if I'm a small restaurateur or retailer and I want to do more with my website, I'm watching the Super Bowl and seeing the Shopify ad, and I just go click on Shopify. We don't want to do that. We want to be that trusted advisor, say, hey, we can help you with that. We're going to do a little bit of services to help you add some of those things. And that's revenue expansion. If we're just purely project based, it's X dollars per install and that's it. But if we turn on, a monthly web service and a monthly AI service and, and credit card processing, all these things, it's just driving that incremental revenue per customer, which ends up being per employee. And, it's ultimately making people more efficient. If the only way we make sending a guy with a truck to go do a thing, we're never going to be truly healthy from a revenue standpoint.
Yeah.
Great. Thank you for that, Will. And I think you might have answered my next question, but I'll ask it anyway, because I'd love to dive deeper with you and Dean on this. So like the RSPA's focus that we had on our Inspire leadership conference that we just had in late January, earlier this year, and it's really the focus for 2025, and we don't quite know how long. It's helping VARs and ISVs better compete against, we said the phrase before, margin obliterating, VC-backed, 800 number, one-size-fits-all POS providers who don't have a channel. And so in the comment section at the end of the study, that really dominated what solution providers see as the number one threat to their business. So I guess, Will, do you share that sentiment? And then what is POS Nation doing? What are other VARs doing to improve their organizations to compete against them? You talked about adding a lot of services and providing more of a unique value proposition. So I guess what is your answer to that question, if you can expand upon that?
Sure. Yeah, I mean, I think the exposure to those 800 number VC backed firms is real. I don't think I don't think every merchant and every restaurant's going to go switch to one of those. It's not 100% risk, but we can certainly hedge our bets and be, like I said earlier, nichier. I just think the more you say, hey, we just kind of do point of sale, the more you're at risk to losing a significant book of your business to the generic providers. And so, with our business, we made that decision right at the beginning of 2020, and it was pure luck that COVID helped us out with that, knock on wood, and we hate to profit from all the pain of COVID. But we had said in January 2020, like, we are going to stop doing a lot of the miscellaneous that POS Nation had done as a VAR. It really had been all things to all people. We had like 9 software platforms we sold.
Okay.
And the point of, POS Nation buying CAP was to become a more streamlined ISV and focus on some niche verticals. And we had chosen liquor, grocery, and convenience, and in that ethnic grocery more particularly, as our go-forward markets. And then March comes along, and those are the only 3 things that were allowed to stay open. So it worked out for us. But, not saying those are the only verticals, and certainly hope we don't have another COVID moment come along where the government chooses for us which are the winners. But it's the point is valid, that if you're good at a certain thing, you can go after those. And if I'm a merchant and I'm looking at, okay, any of your big 800 number players they do most things, but if there's some vertical specific feature sets and services that those guys don't do, you're going to win a lot more business. You're still going to lose some. There's a lot of uneducated buyers out there that are just going to go, well, that's cheap, but whatever, I'll take it. But then those are opportunities. You lose a deal to one of the big guys that's generic today, call them in 6 months, ask them how it's going. Is it really serving their needs? And we get a lot of business like that where we lose the initial deal and then they find out 4, 6, 9 months in that it's really not serving their needs and they're willing to switch. I think one thing that jumped out at me from that threats section is that the nichification is a real way to address that, but also the pricing. People have consistently said, oh, it's super cheap, it's super cheap, it's super cheap, and I'm not sure that's really true anymore. I see like it's true to an extent, and they do pushes into certain verticals and say we'll just grab market share by giving away the hardware, but I've seen proposals and they're somewhat in line with normal standard pricing. It's not. So don't be daunted by that idea that you're always going to lose these deals on price. Go in with a solid service stack, go in with that unique offering, and stick to your pricing, and probably win some deals.
Yeah.
Well said. Yeah. Pick a vertical niche and double down on what you do special. Dean, what have you seen successful solution providers do to compete with the 800 number guys, and what do you want to build on what Will just said?
Well, don't do one of the other headlines that you had highlighted here, which really, again, pained me. Some VARs have thrown in the towel on marketing. Don't not market.
Right.
So 71% or 7.1, I'm sorry, percent of solution providers say in 2024 they didn't spend anything on marketing. What you don't want to do is put your head in the sand and say, well, I can't compete against those folks. You don't have to compete with them on Google. You don't have to try to outbid them on your ads there, but you can certainly compete with them, number one. Number two, you have to get your message out. It's okay. Go ahead and compete. Why? Because people buy from people. I think Will's advice is dead on. If they go with somebody else initially, call them back in 2 to 3 months, see how it is going. Why? Because people buy from people. And if you show a genuine care, an interest in what they are doing, and you believe that your differentiation is of value to them, you'll eventually win that deal. And again, just don't stick your head in the sand and say, like 7.1% of them are doing, and saying, well, I'm not even going to go out there and market. You have to market yourself. There's with AI and things like that, there's more efficient ways to get your brand out there through less and lower expensive ways. Facebook, for example, or just good old traditional printing of a card and mailing it to prospects. Believe it or not, that still works. We implemented quite a few of those last year that had a lot of success behind them. So there's ways to do that. I would advocate that you keep your head above the sand, go out there and be a proponent. People buy from people.
Yeah, it reminds me of the old baseball aphorism, hit it where they ain't. Right. And like you said, don't go toe to toe with them on Google. But if you can exhibit at local events and attend local events, I know there's an RSPA member, VAR in Iowa. They have somebody, and that's a lot of what they do, where they are elbow to elbow with the community because they know the 800 number guys are not going to be there. Yep.
Get your sales reps out there too. Right. Exactly. Rub elbows with the community. You'll win.
All right, last data point before we end up with time. So it says in the survey, this is about company size. Last year, a third of survey respondents, so 33.8%, reported fewer than 5 full-time employees. But this year, that dropped to only 1/5 of respondents. And then also, anecdotally, RSPA has seen an increase in smaller VARs and software providers among our membership base. They're either being acquired or they're merging with other solution providers. So, Will, I want to take this first since you went through a merger and acquisition not so long ago. The question that we asked in the report that I'll pose to you now, do you think the smallest of small VARs, not all of them, are fading away due to the ever-increasing complexity of the retail IT channel and its challenges? Again, I'm not saying all of them, but it seems like a lot of those less sophisticated guys who don't have that next-gen leadership are just like, yeah, I'm not going to revamp my business at this point in my career. Will, what's your take on that? And then Dean will give you the final word.
Yeah, I mean, scale is a problem and desire is a problem, and we've talked about this over the years. If you're that small shop that's a family business and the proprietor, owner operator is reaching retirement age and there's nobody to take it over, you're probably just going to close your doors or say, oh yeah, we're going to get acquired. And like, well, you might get acquired, you might not, you probably won't. The revenue's not there. There's no compelling reason, and that's the myth, is that if you want to sell your business, there's somebody just waiting to buy it. It has to be a compelling proposition. because I'm not going to, as a buyer, come along and say, look, I'll overpay you what you think your baby is worth. I'll just wait for you to go to business and go sell something into that market. It's a lot cheaper to do that. So I think, from an acquisition standpoint, having a plan, like why do we want to sell and who is a good fit for us, and be tailoring your business over a couple of years to that, start those conversations, but don't just put acquisition as a plan without doing any planning around it. But, to your point about the truly small, 2, 3, 4 people, it is hard to diversify, and it's hard to do all of these things we talked about, and it's not going to get any easier. But I would argue that it's always been hard. If you look back 20 years ago, there were very few of our top line high success story VARs that were 3 people. So, none of that's net new. I think a lot of Dean's comments point at the idea that we can do these things differently than we would have in the past. If it's that one-to-one relationship, if 3 people times the amount of work we do is the revenue we make, then you're never going to get there. But if we can layer on, AI is a good example. It's not replacing employees and putting people out of work. It's letting us do more with what we've got, and some of these other tools. So starting now, if you haven't already started, is the only way to avoid starting later.
Yes.
Perfectly obvious, but you just have to get started. You have to address it instead of just shrugging and going, put your head in the sand and say, well, we're too small, we can't do it. You'll be right.
Yep. I'm going to start quoting you, Will, on this. It's always been hard, right? For anybody who says this is too hard, it's always been hard.
Yeah.
Dean, final word on size of, folks we saw participating in the survey, future of the small VAR from your perspective. Oh, you're on mute, Dean.
Sorry about that, because I had a bird attacking one of my windows, so I was on mute for just a second there. Tis the season, I guess, right? Spring's in the air. But I was looking at one of the other studies that we conduct internally, and unfortunately, what you're saying is true. We are seeing an erosion on the SMB marketplace. We tier our customers, and when you look at it, we're seeing the most erosion in what we call the tier 5, which are folks that purchase less than $500,000 a year from us. And again, to us, that's the SMB. Even though there's a significant amount of erosion, there are still a significant amount of people there. So, there are over 3,000 companies just in the US alone that buy from us every single year that fit that demographic that I just gave you. So there's a lot of folks out there, and there's still a lot of opportunity. Consolidation happens. It continues to happen in the industry. We're seeing that mostly in the higher tiers. But as the SMBs kind of erode, where is that business being absorbed? Well, it's being absorbed in some of the larger players. And finally, I think Will's hitting it on the head there. I think resellers today, to be successful in the SMB marketplace, it's not just the 1, 2, 3 person shop, as your survey indicates. You really need 5 to 10 people with a variety of different skill sets in order to execute those types of business outcomes that these folks are looking for. And again, that's kind of expanding your universe into new ways and new services that you might offer. So the trends are there, if you ask me.
Excellent. Great insights, gentlemen. That does it for this episode of The Trusted Advisor. We hope you enjoyed our discussion. If you did, be sure to subscribe to the RSPA YouTube channel and the Trusted Advisor podcast so you never miss an episode. And if you'd like to learn more best practices for VARs and ISVs in the retail technology industry, check out the RSPA blog. You can find it at gorspa.org and then clicking on RSPA blog. And as we said earlier, the RSPA website is also where you can secure your own copy of the 2025 RSPA Retail IT Channel KPI study on our industry reports section. Before we go, big thanks again to Dean Reverman and Will Atkinson for sharing their wisdom with us today. Thanks also to RSPA Marketing Director Chris Arnold for his production work, Joseph McDade for our music, and last but not least, thanks so much to you for listening. Our goal at the RSPA is to accelerate the success of our members in the retail technology ecosystem by providing knowledge and connections. For more information, please visit our website at gorspa.org. Thanks for listening, and goodbye, everybody.